Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, July 9th, 2018. Just getting on to 4 p.m. Central Daylight Time. We should get S's on these any moment where the settlement prices are coming in. But it was a green day in the stock market. The market seems to be converting over already to looking at the earnings that are coming out in the marketplace. And that's, I guess, good news. The problem for, I think, a lot of traders will be, what is the guidance? Certainly for domestic suppliers and so on that are looking just at a domestic market, it's going to be one thing. But those involved with China, Mexico, the EU, Canada, well, we're going to see how they are looking at the guidance for everything. Also interesting as to what's going on with wage pressure. I was reading a story that I write about tonight in my update. And in my update, I talk about the fact that why aren't we seeing more wage pressure in goods when it's already there for a bunch of manufacturers of them? And the reason they're saying is Amazon. Interesting. You get the big horse, the elephant in the room, and it's got so many different people coming through it that each one trying to lower the price. I shop on Amazon, and you're always looking for the lowest price on it. Interesting what's going on there in terms of that. So it's one of the reasons they're saying we're not quite seeing all that. If you take a look at what's going on with the dollar, a stable day, pretty stable in the Swissy, the euro, and here's the S's. So there's all your settlement prices. They just came in. I'm surprised that the British pound held on as well as it did. And, you know, markets that don't break on real bearish news, they have a tendency to reverse course and go the other way. So I'd be watching that. But two of Miss May's, the Prime Minister of the UK, have resigned. Boris Johnson, the most famous, obviously, and this is because they don't like the way that Brexit is going. But Brexit's been a problem all the way through, and who knows where it will end up at the end of the day. So let's take a look, if we could, at the markets. I'm still leaving on the weekly area chart of closes the high to the low, and using from that high that we made, and this was right at the beginning of the year, as most of you know, the Fibonacci numbers. We had gotten to the point where we had a 62% correction plus. We fell back into the under 50% correction range, and with the rally we're getting right now, we're starting to challenge those highs. If you exceed it by too much, then what you put into play are the old highs. So we'll see what this does. I do keep in the back of my mind, strong Mondays often lead to weak Tuesdays. It's just an adage. It's not a trend. When you take a look at this chart, the one thing I can see is that the 2,800 level is now very much a reality for the test of this market. It's been here before. You can see back here that you got up into that zone, failed. You can see right through here that you got up into that zone. So a lot of traders are waiting to see, does the market get there? Does it catch any stops, or does it stall out one more time? Certainly on the charts, things look bullish. You've got higher lows, and the importance is you've broken out to the upside again. You're over the 18-day average of closes, and you were on Friday, and you extended it instead of pulling back to it today. When I put on this chart the Bollinger Bands, which are the algorithm that gives you theoretical resistance and support, that resistance is around 2805, supports back at 2750, and break lows are supported with the 100-day average. This is not a bad-looking chart, still looking all right, with one problem for it. Momentum. Momentum is spent. Now, that doesn't mean you can't take momentum from an overbought condition and lock in an embedded reading like we've done in the past. The problem is these embedded readings aren't carrying the market dramatically higher when they're happening. So I'm going to look at this market as, yes, it can very much go up and challenge that 2,800 level, but I'm skeptical that it's going to grab another leg. That's all. If I look at the NASDAQ, I still see a market that's got good upside. Unlike the other market, it's not overbought. The Bollinger top, 78, 73, 86, 75, let's call it. Support back at 71, 79. Trend up, bias up, still in an uptrend. The Dow is something of a laggard right here. It still has the 18-day average under the 100. It's fighting its battle in between the two of those numbers. Unlike the others, it's just picking up its upside momentum. It's been a dog. So the question is, does the dog become a lion and start roaring back to the upside, maybe to the upper Bollinger Band? We'll find out. But right now, while the trend is up, you're at an important resistance point. And the Russell overbought. Any reading in the slow stochastics that's over 70, I consider overbought, unless it develops this sideways embedded reading. And unlike the NASDAQ, each time this market's gotten it, it has poked itself higher. So it's acting better than even the NASDAQ. And this market is a candidate for the 1723 level. In terms of the VIX, you know what I've been saying. I think, can't prove it, I think that every time you're hitting now the upper Bollinger Band, the put writers come out. I'm sorry, call writers at the top, put writers at the bottom. I said it completely wrong. My brain stopped for a minute. The call writers are coming out, and I think they're covering at the 18-day average. Should the market fall down, I think they're writing at this point the puts, letting the people that want to get bearish get caught there, they're hoping, and then coming back out at the 18-day average. And if you look at that, it's been going on fairly constant recently. Can you get caught? Come on. You saw this big move we had at the beginning of the year. Option writers, the problem that they inevitably have is that a market at some point explodes on them. And in that explosion, what can happen is you don't have a strong bid-offer correlation and the market moves. How do I know it? We're a futures firm. You think we don't see it? I've got quite a few years of doing this, and that's what happens. I love the strategy, so sometimes they'll put on put strategies or call strategies rather than just outright naked. But then some of the profitability of that strategy fails away. The safer it is, the less profit is normally the game. If you take a look at these SEP bonds, you can see how the market is now losing momentum. Was this the rally that now the market stalls out on? Can't answer that. What I can answer is that we have a huge amount of now 3-year notes coming to the marketplace and other instruments to fund the debt that we have via the tax break. So it's up quite a bit, the sales, something like 20-some-odd% higher than last year. And we're seeing that pressure as the market got up to the Bollinger Band, slipping back, and momentum is lost in this market. TLT, starting to do the same thing. Momentum under 80, so the market's starting to slip back in the momentum. Will these markets go back to the 18-day average of closes in all of them? It wouldn't surprise me if they get auctions that are what we'll call strong, having to get a high yield to get these things sold. In the dollar index, we're going from basically the upper Bollinger Band to the lower. I'd expect to see some resistance at the 18-day average, but you are oversold in the market. In the euro currency, it's the mirror image of the dollar. It's got higher lows, higher highs right into the resistance point. I'd be surprised if it can get on from there. The British pound made a run for the upper Bollinger Band. Normally it stops in that zone. It did today. It missed it by 9 ticks, fell back to the 18-day average, trying to hold on there, but it is an outside day down in the market. What I see more happening in this particular currency is sideways action. I expect these Bollinger Bands to go very much sideways, just like we're seeing in the yen, but the yen is starting to pick up a bit of downside momentum, lower highs, lower lows, outside day down today, but oversold. And what would make this market jump, obviously, is some shock to the system, probably hearing more escalation of trade wars, things of that nature. Bitcoin, there was an interesting study by Boston College. I write about it in tonight's report. If you get my research, you'll see it tonight, where out of 100, theoretically, 100 ICOs, initial coin offerings come out, what percentage of them you think fail? And fail in the first 4 months. I write about it in detail. You want to read it. In the SEP Brent versus WTI crude, the market's going from $11.35 to $5.54 and getting a little bounce back to $6. Certainly, we've seen the premium fall apart there, as we're seeing that in the U.S., even with our increase of rigs that we saw on Friday, the market's still acting pretty good. And you see here the Brent, it's got lower highs, lower lows, but over the 18-day average, I'll call it a neutral trend. Momentum in the market overbought. When you come to the WTI crude, you have the embedded reading. That's the strength. And that strength is the two go this way has brought them closer together. In gasoline, still in an uptrend, overbought, but in an uptrend. Will it hit the upper Bollinger Band at 217.37 before it takes out 209.52? I think is part of the question you have to ask. And in that gas, you know, what can I say? The market's had the heat. It's getting what it's looking at. We'll soon get to that point in this market where supply is overwhelming demand if you're not careful, and momentum is getting to the point where you might go down and embed. And if you embed and you do something like this, you might start running that lower Bollinger Band to even lower numbers. Therefore, I think traders are going to still look at the old highs like today. You don't want to see today's high taken out in the next two trading sessions. It is an outside day down. And with the prospect here of converting from oversold to embedding, you could just start riding that lower Bollinger Band, which would be very, very interesting. Want to remind you, if you haven't gotten my information, you might want to go to our website, www.iraepstein.com. You'll see a carousel of free offers right on it. All you need to do is click away and you're there. I'm Ira Epstein. You have yourself a good day. Talk to you tomorrow.